The first thing I want to talk about, I just got really excited with one of your points, and that is kind of the historic relationship in certain options to the FAANG stocks. And then I realized, oh, my word, what those out-of-the-money calls have done for people that had I don't know, what was it? Was it foresight? Were they gambling? Is it Robinhood types? But so many of those stocks have moved so far. I mean, they've gone through 10, 20 strike prices, just up, 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 up. They must have incredible returns, and people have used that to make a lot of money.
Yeah, I mean, all of the above. So for people who aren't in options world, I think that it's difficult to understand just kind of how these historic relations have been upended. You know, normally call option prices are not supposed to be higher than put option prices, in particular in a market that continues to climb up. So the fact that we've seen this in Amazon and Netflix and Tesla just across the board during the pandemic is a pretty big deal. And Robinhood has a huge impact on that. A lot of people, push back to me and say, look, how much could it possibly have? But just the sheer lot size we're seeing, so we'll see 100,000 contracts trade, for instance, but when you dig down, it's 9,900 individual trades.
Wow.
So, these are small investors on these platforms with stimulus money coming in and bidding up that wing to a point that it doesn't hold in a historical context anymore. And so part of the reason why you've seen FAANG, momentum, growth, tech, whatever you want to call it, why you've seen that outperform about 50% relative to value names.
I mean, is it across the board? Do they go out $10 above on a strike price, $20, $30, $40? Do they buy? They're buying things for an eighth that it's going to $4 and $5. Are you seeing returns like that, or you can't buy it for an eighth? I just think you said that the premiums were not where they should be, so they're more expensive than they would normally be, I guess.
Yeah, we think about the world in terms of deltas, but in terms of how much out of the money it is, call it 15%. On sort of 3-month options. Part of the reason that they're choosing this is it's cheaper, right? So you're thinking about a cohort that needs to use leverage because they don't necessarily have the amount of premium that they're willing to spend. I think that's why options were the focus in the first place. I read an amazing stat yesterday that the Tesla weekly options went up 7,000%. That's a 1-week option, given the recent move. So, one thing I've heard is that, look, when sports betting markets closed, this was sort of the next best alternative. Yeah. I think there's some truth to that.
There is, but also, and I can't do it. That kills me because I have no DraftKings, and I can only. When I was in the business as a broker, I did have to spend a little too much time on my own account playing like OEX options on expiration day. To buy them for an eighth and they'd go up. Anyway, so let's get to Goldman Sachs. So the point you make, though, is that we have seen these Momo and the growth stocks just totally in the derivatives market. There's no action in value, and that's also historically lower and might be presaging a shift, do you think?
Yeah, I mean, days like today are a pretty interesting indicator. We'll see how momentum versus value turns now. When we say value, at this point, we really also mean the recovery names, right? So if we're going to get a vaccine and that starts to look promising, you better start watching your airlines, your cyclicals, your consumer names that, have pretty much been hammered during the pandemic, while we call FAANG like the new COVID utilities, because that's actually where the flight to safety has gone. You're better off buying an Amazon call than you are buying an S&P put if you want to hedge. That's really been the correlation. So I do think that factor is going to be in for a pretty big shift if we continue to see positive data come out on that.